Hey, how's it going everyone? I hope everyone's good. How's your trading going? It's been a bit of a crazy year this year, 2020, with all the COVID-19, but hopefully things get better, but I don't see it to be getting better anytime soon. So we're going to go over some important topics. We're going to define the odds, alright? So we're going to look at break of market structure. Yeah, so we're going to look at breaks of market structure and taking higher probability trades, which we'll want. So let's get down to business, right? I'm on NZD CAD, New Zealand dollar, Canadian dollar, on the 4 hours, and as we can see, we have a trend here, then it consolidates, and then we see this right here, this impulsive move. We call this an impulsive move because look how aggressive this move was. This was on December, right? As we can see here, we have a resistance right here. A resistance right here. And we have a support down here, okay? So that's our support right there. Now, let's take a look at structure. So we have the trend right here. So it's broken trend lines. This broke the trend line with an impulsive move. But not just that, if you look at structure here, higher highs and higher lows, it's broken this right here. It's broken this right here. Broken this. It's broken this as well. Can you see break of structure in every single one of these? Yeah. So it goes higher low, higher high, higher low, higher high, etc. So it's an uptrend, right? And then it consolidated for a bit. It's done an impulsive move, taking out all this market structure right here. As you can see, it's just taking it all down, taking all of these out right here. Yeah, and it stopped at this, made a support around this level right here. As you can see, that price was just bouncing on this support. But this impulsive move broke a lot of structure right here. Okay. And the source of this break was this candle right here. Yeah. As we can see, we've got a rally up and then a drop. So a lot of people use OBs. I'll just call it a simple supply zone. I'm not going to glorify supply and demands with OBs. That's exactly what it is. This is just a simple supply zone. There's a supply right here. And you see that it had all of these this drop right here. So this was the source of the drop. So price tends to come back up, retest the source, or take out or find liquidity with pending orders. So in this area there'd be pending orders. The way that it's consolidated, so it's quite a small rotation, but as this drop here, there would have been pending orders up here. So price would most probably come back up here, tap out liquidity, and start dropping back down. Alright, but first it would induce all the buyers, get all the pending orders, take out any stop losses. So this is all what's happened here. So for retail traders, I always put their stop loss just above support resistance, or the highest candle. So at this point, you guys would have saw this move right here and thought, yep, it's selling off, and put your stop loss up here. Then it's rallied up, took your stop loss out, and then dropped. So it took your money, and then it made its move. So it just collected as much contracts as it can, made this spike right here, and then just dropped all the way down. Same again over here. Same again, it probably didn't even need to, because look, you could just see a small little spike. It wasn't even needed to take out as many stop losses to grab liquidity, but this will be a pull right here. So in the future, it may come back down, tap out just underneath right here. So I can put a zone right here, and I know that it will hit this zone because it's right underneath the support. So eventually price may drop down to and then back up. As you can see, it will come back out, spike down, and then come back up. I'm just giving you examples. So this is just divining the odds that eventually this will all need to get filled up, because it created an imbalance in the market as it broke order structure right here. So it needs to mitigate and rebalance itself. It'll come back up here, either consolidate for a sec like this, it'll consolidate for a sec, take liquidity in, and down it comes. But you'd have to look at higher time frames of what's going on. Like again, another one here, it's broken this structure, and the one responsible was these down here, with this candle down here. Yeah, so as you can see, this was a nice little spike right here. I would presume that price would come back down to test this at some point. Again over here as well. So you see this one right here, it's broken this structure and it's come down, and then it's broke the structure, and then it's kind of like spiked down and then gone back up. You got to look at the impulsive moves. Yeah, that's breaking structure. This is where you want to start marking up the areas. Yeah, you see this one right here, this will be a nice little area over here. As we can see in the supply and demand world, it's made a valley. It's made a valley. So it was a drop, base, rally. Yeah, and then let me just mark that up. So like I said, I ain't gonna start talking about OBs, there's no point, it's just supply and demand. So this made a demand zone right here. I would say eventually all these will get tested, they always do in the end. And it broke this structure right here, and then up we go. Alright. As we can see, there was a liquidity pool right here, which it kind of took out. There was a support right there. Let's go back. Have a look at what's going on. So again, we want to look at high probabilities. We want to look at what's breaking structure and look at high probabilities. Here we go. So as you can see, this come up and tested something. This tested. This was a test of this, which took liquidity as well. So there was a liquidity pool right here. As we can see, right above the resistance level, took liquidity. Like I was showing you earlier on, put your books up here, and you know that's going to take liquidity and then fall. On the daily, there'll probably be a spike, and then it dropped all the way down, made this, and then rallied all the way back up. That's what it's doing, it's just testing levels. As we can see, it tested this one right here with this big candle. Took liquidity and then ran off of it. So this would have been a nice little candle as well, because you see how big this was. See how big this candle was. This is a extended range candle, same as this one here. They've taken that out. This would have been a nice little zone right here, and that's taken that out. With this candle would have been a nice little retest, and which probably did, which was this retest right here. It's come down, it's retested these levels, and then gone. And then you see another retest right there as well. It's come down, retested it, and then away you go. So we want to start looking at high probabilities, the ones that are breaking. You see, the best thing about this, right, was these are the levels. If a opposing candle takes out opposing zones, for example, this took this zone out, these are more higher probabilities of a retest later on. And you can see this was a retest, and then it went all the way back up. So if you got in at this section, you would have took all of this, because it took out this opposing zone. You'll start looking at opposing zones and the breaks of them, the break in market structure and the break of opposing zones, right? ICT will teach you breakers. These are breakers, and these are order blocks. Supply and demand, really, that's all we're looking at. There's no difference. There's slight difference, but different rules, but the concepts are the same. It's just rewashed supply and demand with a load of other rules. Again, see this candle here, come down, retested this right here. As like this broke the structure right here. So this was the candle that broke the structure, come down, retested, and then away you go. Yeah, that's all we're looking at. We're just looking at breaks of structure, and this broke a lot of structure as well. So there's any retest around this section. Not yet. May expect a pullback at this later date. I can go onto the daily and the weekly and do this on the weekly as well. On the daily, this is what I pretty much mark it up on here as well. I can go on any time frame and do this on any time frame. This one broke structure right here. So this broke this structure right there. As we can see, this broke structure right here. This was the candle, the source candle that broke the structure. It's come back up, retested, and then just dropped. And this you would have been in this for days. So if you got in around here, you're looking at 174 pips. You can, like I said, you would have had drawback and come back all the way down. It all depends on your trading style. End move was what, 260 pips. So again, we had another one here. As you can see, there's an impulsive move upwards. We had a pause in the market, but I probably would have done the whole area like this, and then it's tapped it. We had a support right here, it's tapped it, and then up we go. What, 500 pips? All we're looking at is that support and resistance, and that's all it is these days. We're just looking in higher probability trades. Just looking at structure, break of structure. Look again, one break right here. This one broke. The responsibility was this move here. So let's move right here. It spiked that up. Where did it retest? We tested this and then drop back down. But yeah, this would have been an impending move. This would have been liquidity right there, which eventually got taken out. So you just got to remember that when it comes to your, for example, look here. I'll give you an example. I'll give you a prime example right here. So we knew that at this area was a resistance area, and with these high wicks, that this was a liquidity area. So we know at some point this is going to get tested because of the liquidity pool right here. Right, and again, retail traders, anytime they put trades in, they always put their stop losses just above here. So stop loss would have been just above these wicks right here. And again, if it was in a resistance area, they would have put, or if there was in a support area, they would have put their stop loss just below here. Yeah, typical how they've been taught. It's not their fault. They just need to be educated. So this is where they put their stop losses. Again, market maker knows this because they taught them where to put their stop losses. And as we can see, prices spiked up, took out any sellers in the area, and then just dropped all the way down. So and then look, it made this candle right here. So it took all the pending orders in here and then it's made a move up, took liquidity that was in this section and then just dropped. So it took pending orders plus liquidity. Yeah, and then we can just define this area as, look how strong this candle was, and the break of structure was right there. So we can say this area right here was a nice supply area. So eventually it may come back and test this. It's tried to test something along here, but it may come back up and test this with this liquidity pool as well. I'd say this would be a nice little liquidity pool right here too. So I'll be very interested and to see. I would say put it just above here, to be honest, just be on the safe side, unless they don't want to release liquidity. If I was buying up here, my target would be right here, somewhere around there. I would say just above there, to be honest, and then drop it all the way back down, because don't forget it needs to fill this area here. So it could take liquidity, induce buyers, and then sell off. So you ever got into a trade where you put the trade in, it's hit your stop loss and it just spiked the other way. So it went the way that you wanted it to go, but then it hit your stop loss before. So it's tapped you out before. That's what usually happens. Again, see this impulsive move right here? Probably. It's hit this multiple times. The problem with that, the more times that it hits, the more weaker it gets, because it's just building momentum. That's what it's doing. So it took liquidity, then just broke through, and then away you go. Then it's come back up, retested this area, and gone. Made another liquidity pool right there, as you can see. Took it out, that took that out, spiked up. I said you can just do it again and again and again, but the most important part is just looking for these impulsive moves and then just marking up the source of the impulsive move as well, because it will just retest it every single time. Eventually it will just, you got to think about the imbalances as well in the market. See, if there was big pending orders like this makes the market imbalanced on their order books. Eventually they'd need to mitigate that. And then price comes back down, fills and balances the books. Took liquidity, left all these sellers at this point, and it just ran back up and does it again and again and again. But yeah, see this right here, if you had your stop loss right there and you sold, you come back up, took your stop loss out, and then it went your way, and then you brought one back up. So it took your contracts out. So it took as much contracts as it could. Every single time, it'll just do it again and again and again. Like I said, the impulsive move right here, and it's come back down and filled it all. Took this right here, this one, look how big this candle was that broke the structure. That's what it's doing. There you go. And then if you get these moves, you could just be in it for months. I mean, yeah, you could have just took that for months, really. I mean, what's the date on that? 16th April 2016, November 2016. That's a lovely move. Position trade, you would have took all of that, you know. But yeah, I just wanted to define the impulsive moves and breaking of structure. So just look for anything that's breaking structure. Now, you get different brokers. So I would do this on the MT4, as MT4 wicks would be different to the bodies. So this might be different on your broker, this wick right here. So you want to be looking at your broker on your MT4 as well, to make sure that you're having the same sort of areas. Alright, so I hope you like that. If there's any questions, comment down below. Join up to the free Telegram group. So also, if you like this content, like, subscribe. Alright, take care and I'll see you soon.